All right, folks, welcome back. So obviously I posted a YouTube video and I answered students from the free community and mentorship because we've been recently talking about bread and butter setups, and I had a mix of questions coming to me by way of Telegram and by way of TradingView. Now, this is not an invitation for all of you to try to hit me up on TradingView because there's so many people that try to do that. The little thing over here always highlights. I'm surprised it doesn't light up while I'm doing recordings. The idea is distinguishing between the bread and butter setup or scalps and the day trade. There are students here that have asked for me to illustrate what it looks like to use the standard deviations and do a live execution and management and pick the stops that would best illustrate what it is that you learn in this mentorship. And that's what I showed on YouTube. Now, I did not obviously teach the mechanics behind it, but there was absolutely zero order blocks. No order blocks, no optimal trade entries. Okay. I'm going to strip it down to what it is I was doing, and that way you can grow to appreciate the level of precision that you're learning here, and also to respect the seat that you hold here in my house. Now, a lot of you are in the accelerated payment process, okay, the 2021 group. I'm encouraging you, but I'm not holding you to it. If you can't afford to do it, that's fine. But if I can thin out the herd and have the majority of the folks do this, it at least helps with the bottlenecking that occurs. So everyone can see the links in 2021. Okay, so in other words, you can see everything all the way up to a month 12. I'm not allowing access to Charter until this weekend because I have to create specific user groups. So that way, everything that gets uploaded to your account will have a tracking group. That way, I'll know right away this group of 20 people has a leaker, and it won't take long for me to find you, and out the door you'll go. So, back to this, okay? The euro dollar today, obviously, we had the ECB monetary policy and then the ECB conference at 8:30. So 7:45, we had the rate announcement and monetary policy. What they're deciding to do. I don't care. I didn't even bother to look at what it was. As I mentioned before, I don't care about those numbers. Those numbers are just to manipulate the perception and expectations and to build sentiment on the street. The street is retail. Okay, so I could care less about what those numbers are going to say. I'm watching price to tell me what it is likely to do. I essentially traded the seek and destroy pattern today for you. So I used the part that would be the bread and butter setup, and then I traded the day trade. So how they ran out everybody for the real move. And I showed beautiful execution, not to pat myself on the back, but I needed to do it because YouTube's gotten crazy with my stuff and no one really given the credit for where they're being inspired by it. But just to show everybody out there that it's not order blocks, it's not supply and demand, it's real understanding. And there are timing elements that are being utilized in that video that I cannot teach you. Okay, and I know some of you are going to be mad hearing me say that, but I want you to appreciate my honesty. I could lie to you and say there's nothing else here, but there really is. But I want you to remember that I'm teaching you things that get you very, very close to what it is I'm not allowed to teach you. Okay? So that's the purpose of me creating the mentorship and the language, because it protects me and allows you to get as close as you're legally allowed, and I'm legally allowed to share. So that way, there's no way I can be smacked on the back of my hand and say, no, you're doing what we asked you not to do. Okay? So, long story short, I'm going to ring in some tools that you all are familiar with, especially if you've been through my free content, but obviously in the mentorship, you'd learn this as well. But we're looking at the euro dollar from the perspective that today was the big day for the news. Lots of manipulation, And we've been talking about how euro dollar has been held. It's not been allowed to trade lower like cable did. It's been manipulated. So because of that manipulation and the consolidation it's been held in, it won't be allowed to release. That's what gave me the inclination that we're probably going to have a seek and destroy profile. So that's number one in your notebooks when you're looking at your price charts from today, and you should be really studying this one today. Not just what I'm showing you here, but in your own charts. The profile I elected to work with was seek and destroy, and the fact that we have not been willing to go lower. So what are they likely to do ahead of the ECB monetary policy and conference at 8:30? So 7:45 and 8:30 New York time today on July 22nd, 2021. The expectation would be drive it higher, start to sell it off, get people on the hook, put their buy stops above the marketplace, and then do it again at 7:45 and let them build buy stops above the high, and then run it one more time. And then that's the move for seek and destroy. Then it goes where everybody wants to see it go, which is go lower. So let's address this up a little bit. Okay, so we have an old low here. Nothing mystical about that. We have the Asian range time delineations here. I'll move out of the way so you can see what they are. So 7 p.m. to midnight Eastern time. So we'll take that off. We don't need to see that anymore. And this is simply just the high and the low of the Asian range. That's all I'm showing you here. Okay, that range. So once we have this range, we can start working with standard deviations. Now, the expectation I had was we're going to see the market at 7:45 whip up above these relative equal highs, and over here, all of this liquidity. They're going to whip it up there and then sell it off and take out the London low. And that's going to get traders thinking that we created the high of the day and it's going to sell off like crazy and it's going to be easy, big down day. And all the stops would be cleared here, and then all the stops for the day would be resting here. Wrong. Okay. So this old high is where the best liquidity would be. And this would be the best scenario for the algorithm to run out for day trading purposes. So let's add some more detail here. So if we have this high here that has more buy side liquidity than all of this, okay, we can add the trend-based fib extension tool. And I've showed you how to set this up. I've showed you a screenshot in other videos. But we're taking the low and the high. You see that? Low. Drop it right on the low. Click once. Draw it up to here. Double click. Okay, and move it away. So what I have here is the standard deviations of 1 being shown, 2, 2.5, and 3. Now, I added 2.5 because by having 1 through 3, it gives me the range to work within where what overlaps with this old high. Well, at the high, there's nothing because there's standard deviation 2 down here. Above it, or just above it, it's 2.5, which is 1.18278. So it's 118.27 and 8 pipettes. So that level is a nice level. I think that if it goes there, it should sell off. Why? Because the initial run up here sweeps it. I did a bread and butter setup there, buying the sell stops, shorting the buy stops. So I sold to the buyers that want to buy, want to stop. If they're short, their buy stop getting triggered, I sold that to them. In theory, obviously it's a paper trade. But as it trades lower, these sell stops, I bought from those sell stops. So I took from the buyers and I took from the sellers. Bread and butter. Then I allowed the market to stop me out, which is fine. I could care less. It didn't take anything from me. Then I sold short as it slammed into this level, but more specifically, if you watch the video, you watch it trade up to this level first. Then I sell short. It looks like I'm just trading that red level there because I'm not trying to teach mentorship. Not on YouTube, I'm not. But I'm trading with this premise here, this level, and the fact that we ran up on a seek and destroy profile because it's high impact. The market's been consolidated. It's been held in consolidation. They've not been allowing euro to drop with cable. Even though dollar index went higher, this thing should have went lower over the last few days. It hadn't. So this is the profile I elected to work with. Now, you will not master this profile. I have yet to master it. Okay. Today was just everything came together. It was like a perfect recipe. Everything lined up. All the stars lined up. Let's put it that way. And because they did, I felt inclined to engage it. But generally, it isn't like this. So if you anticipate seek and destroy, it's better just to sit on your hands and just be content with missing any moves that transpire. Remember, seek and destroy generally will catch up with you after the fact, and you'll say, oh, I just got stopped out maybe once or twice. And then it becomes evident that it's a seek and destroy profile for that particular trading day. And it's better not to trade a third time or try to go after anything to get even or to reduce some of the drawdown. Just leave it alone and come back afterward, another day, or maybe next week or something like that. So I'm going to drop down into a 5-minute chart with everything as it is here. All right, so I have our levels here and the 118, 27, and 8. That's what's being noted here. Look how the body's just a little bit above that, but not much of a deviation beyond that. So I teach you all to anticipate it being anywhere between 3 to 5 pips because brokers are allowed to have a little bit of fluff in the numbers. So everyone's high from every broker isn't going to agree. It's just simply not going to agree. And there's that little fluff factor that you have to allow for the flexibility of timing something with the expectation that 3 to 5 pips variance is reasonable when you're looking for the daily high and low. Now, there's some days where I'm just bang on it and I can nail the very high. Sometimes I'm off by a pip or two. Generally, it's less than 3 pips. That's my personal record. That's what I'm used to seeing. But sometimes it's been a little bit above 5 pips, sometimes. But it's such a rare thing, it's really not worth mentioning. So as a general rule of thumb, this concept will get you within a range of 3 to 5 pips of the daily high and the daily low. So initially, if you look at what's going on over here, we have one standard deviation of the Asian range, and above the old relative equal highs, that level there, we have a level of 118, 10, and 3 pipettes. Look at the high on this candle. 118, 13, and 6. About 3 pips, right? So I'm selling short there at this level with the expectation it's going to drop down below this low here. To what level? Right over here. So as it trades down to that, I'm selling short on this candle, right at that level. Eyeballing this, going down below this low to that level, and taking the majority of the trade off. Knowing full well that I'm probably going to get stopped out, but I care less. And it's okay because it runs through the stop and then accelerates above that red level, which is the old high I showed you on the 15-minute time frame, to standard deviation 2.5. This is where the liquidity is. This is where the interbank price level is going to be very close to. It's obviously slightly higher, but because of the lines I have to color in, let's put it that way, I have to speak to you in this language. I know this high. Okay, I know this, and I know it at midnight. It's something I can't teach you. And I'm trying to end this question I get all the time. You promised that you were going to teach everything. Yeah, everything I'm permitted to teach you. And if this doesn't get your gears turning with what I'm showing you here, you're really being unreasonable and you're being absolutely selfish. Okay? That's just the way it is. I cannot go beyond that. I can't go past it. I can't do a little bit better than. This is all I'm able to teach you. Okay? And this is found nowhere else but here with me. And it destroys everything else. Like it literally destroys everything else. If you learn how to do this and you join the Robbins contest, I promise you, you will do record level returns. If you know how to manage your money, trade like this, bread and butter setups, and understanding what the liquidity is and how to line up with the interbank levels like this, you will destroy it. You don't need me to do it. You can do it. They won't understand what you're doing. And it's unmatched. And you don't need to know the things I'm not able to teach you that I would use if I was in Robbins. So the bottom line is this. You're seeing the x-ray view of what it is I'm looking at in my other chart that's not being recorded. So I have multiple screens. I'm looking at these levels here, but the logic, the narrative, if you will, is we started the day here consolidating as you would expect ahead of the news. They sweep the buy stops initially here, drop down in New York, and then run this London low out right to our level here. Look at the bodies. That's what I'm specifically anchoring your attention to, not the wicks. I can care less about that, and not these up here. Okay, the wicks are for the purpose of liquidity and spreads. You're not going to excel in that area. So keep your focus predominantly on the bodies of the candles and feel confident that that's where the majority of the action is. And if you know how to manage stops, well, it won't matter that these wicks and tails occur and go beyond your bodies. This is where I'm talking about where folks try to say they use a 2-pip stop loss. Okay, you will not. Underscore, you will not consistently be able to do 2-pip stop losses trading like I'm teaching you here. Using this logic, the broker can open the spread on you and take you out. If they see you doing it consistently, they will open the spread on your little pool of liquidity that you're in, your little server like FXCM and all these other jokers out there that run these brokerage firms. And now obviously it's Forex.com. Because I keep 2 accounts that my 2 older sons practice and play around in, and they're on 2 different servers, and their highs and lows don't agree. Not by much, but they don't agree. So that's why I'm telling you, okay? And I have people that come at me all the time on Telegram, and they show me their little demo trade. Look, I'm using a 2-pip stop loss. Right. Do that for a month, every single day. If you can do it, kudos, that's great. But you cannot do it consistently and trade with so precise at the highs and lows. The broker will not let you do that, folks. Okay, I'm just telling you like it is. It will not happen. They will open it up and take you out. And you don't need a 2-pip stop loss. It's like trying to, it's not good enough that you're able to do an Olympic feat of being consistently profitable. But now you got to do it with blindfold, juggling daggers, double-edged knives, and pitchforks being thrown at you at the same time, and you got to dodge all that. Like, you're adding levels of nonsense that's not required for you to do exceedingly well. Like, look at these candles. Look at them. The low candle, I'm taking a partial at. I'm entering on the highest candle. I'm taking a partial on a swing low. I'm taking the low of the day out on that candle. I'm taking a partial there. That's not random, folks. There's logic behind that, and you're learning it. Creates a low below here. Okay, as it's expanding down, take a partial there. Chances are it's going to create a short-term low. Boom, there you go. It runs below this low here. And it's coming close to what time of day? It's getting close to 1 o'clock in the afternoon. We've done pressed below this low, and this low, and this low. So chances are we're probably near the low of the day. Take a partial. Boom, there's the low of the day. Especially if we line up with this over here. So again, watch the bodies of the candles over here. We're trading into that. Well, that's enough. You don't need anything secret that I'm holding back because I can't legally give it to you. But I taught you this exit strategy of taking partials, running down equity. This is it in practice right in front of you. I know this is the low of the day here at midnight. I know this is the high of the day at midnight. Those things I cannot teach you. I'm not permitted to. So please don't send me emails, whether being sweet or sour, twisting and trying to guilt me, saying, oh, it's not fair. We really need this in our part of the world. No, you don't. You don't. You could do very well with just YouTube. Like YouTube Optimal Trade Entry, that makes money. That makes money. It makes money. It's consistent. This is technical science. This is for those that want to know what everybody else doesn't know. But this isn't required to be profitable. This is just for that Olympic gold. You're feeding yourself with low-level, low-hanging fruit, optimal trade entry type stuff on YouTube. Here, you're learning how to refine your craft and to be very, very polished as a trader, knowing the very setups that you really want to be a part of and the setups that you don't really want to be a participant of. When you're able to do that, differentiate those things, you will be a highly polished trader. And you don't need to be trading all the time. You're waiting for those choice setups. On Monday, I was unable to do anything. And I told you it would take a couple days for me to get dialed in. And this is what happens when you know what you're looking for. And what I taught you here today is taught in mentorship. I don't teach you the time elements here. That will never be taught to you. So please, out of respect to me, I don't want to say again in an email response that's not owed to you. It was not promised to you. Okay. I came into this mentorship very specifically outlining things that I will not be able to teach you everything. But if you look at this and the things I'm teaching you here, and you're saying, oh, this is not enough, you're being unrealistic and unreasonable. And I assure you, if you send me an email along the lines that I've been talking about here, it will go unanswered. So that is the business for today. And yep, it's the same account. You go here. And the position is still floating with that. And let's add that stuff back here. And there you go. And at this point, like I said, I don't care if it comes back and takes the stop out because I took the lines portion of the daily range out. And with only $20 per pip on, who cares if it takes that out? Because it still would be a rather decent week. And that, my friends, is going to be it. I will catch up with you tomorrow. Again, I'm trying to do the weekend commentaries on Friday so that way I don't do anything on Saturday or Sunday so I can spend that with my family because kids are out of school. Be safe. I'll talk to you tomorrow night.